From Kansas State University, this is Agriculture Today. Eric Atkinson with you. And coming up today out of Iowa State University, Lee Schulz. On the cattle markets, he'll go over the numbers from the USDA's latest cattle on feed report, and he'll also offer an interesting perspective on purported retail beef shortages. Also today, K-State's Keith Harmoney, looking at the capability of native grasslands to recover from wildfires. He has studied that over the last few years, following a wildfire in 2017 in Ellis County. And later on this week's Agricultural Events segment, K-State's Dale Blasi joins Shelby Varner to preview K-State's Winter Ranch Management Seminar Series coming up in February. All that here on Agriculture Today. Welcome once more to Agriculture Today. Glad to have you tuned in on this Monday. Taking up first, as usual, the cattle markets. And doing the honors this time is Lee Schulz. Lee is a livestock economist at Iowa State University. And a cattle on feed report, Lee, that turned heads when it came out Friday. We'll cover that in just a second. But looking back on last week's trade in review, Fed cattle market held steady while the feeders at the Kansas auctions anyway managed some higher money.
Well, this last week, I'll start with the Feds here. If you look at futures down a little bit, that may be seen as a little bit of disappointment given where we've seen box beef trade. But we need to remember that we've seen reduced slaughter levels here to begin the year. And so maybe that's kind of a win situation. We did see cash prices maybe about a dollar higher, so 136 to 138. There was some 139 here in Iowa. From a dress weight, we were 217 to 218. So overall, given steady feeder markets, we've seen some strength in the cash. Futures were down notably here this last week. I think you got to point to the corn markets being up anywhere from 20 cents to about 10 cents if you even get further out. So that did pressure feeders.
This business of slaughter pace has been monitored for some weeks now with concerns over absenteeism at the packing plants. Is that easing some, do you think?
It's something we continue to watch, and I think, some of that will ease itself out. I think as we look at several market factors, I think there's hope or expectation that, yes, we will kind of see some of those line speed up as absenteeism becomes less of an issue. Another factor to look at is we're going to see some declining inventories. And you can even look in the short term as you look at cattle on feed over 120 days. Those are, depending on where you compare to, if you compare to last year, we're down 3% in those market-ready cattle. So, I think that will help work itself out a little bit, but it's something we continue to watch because this is one factor pressuring the market, and it's really the salient factor right now.
To that cattle and feed report then, well, the inventory number was up a tick, but it was that placement number which caught folks off guard. Talk about that, if you would.
Pre-report expectations had it at par with a year ago to up about 5%. It came in 6.5% higher than a year ago. There was one more business day in the month of December, so that could have attributed a tick to it, but I think it's really the fundamentals that continue to play out here as the West is dealing with significant dry weather. We're seeing that really increased placements of lighter weight cattle. The important thing to remember here is we're kind of seeing this distortion of placements in the short run, but that's also going to have big implications in the longer run. So if they're placed now, they're not going to be placed later, right? And I think there is some concern here from the buyer's side, whereas you look at feeder cattle futures, they're $12 higher as you get into the summer. I think there's expectation we continue to see appreciation there. So there may be some early buying just because we're worried about higher prices as we get into the next several months.
One thing for sure, though, and that's more germane to this part of the world, cattle on wheat pasture just isn't going to happen at this point. That's part of what's contributing to those higher placements. Those calves are going right into the feed yards.
I think that's exactly the case. And obviously, that's not our business up here in Iowa. But when you look at placements, the lightest weight category this last month, you've seen Kansas up 8% for the lightweight placements, Nebraska up 10%, Texas up 18%. So certainly it's where we're dealing with dry weather and ability to hold those cattle on grass, on wheat pasture. We're seeing those go into the feedlot. So, again, we're not changing the number of cattle, but we're changing kind of the flow of that cattle and the placement pattern of those cattle.
Let's shift gears a bit, if we might then, Lee, and look at the demand side of the equation. And you put some thoughts together in an article on what is perceived, or at least stated by some folks out there, as a shortage of meat, and beef included there, at the retail meat counter. And you think that some understanding might be in order here. Would you explain?
So this is an article I've been wanting to write for a long, long time. And being an economist, I couldn't help myself, I guess. And so we're all familiar with all the stories of what's being termed shortages. But in economics, we view everything as a scarcity, right? And so consumers want more than producers are often able or willing to produce. And so in some situations, there's increased scarcity. And I would say that that's what we have. A way to look at that is there may be a shortage of 99-cent ground beef, but there's really probably not a shortage of $4.99 or $5.99 ground beef, because we've seen prices reflect the situation out there. So we've both seen an increase in demand as well as a decrease in supply. So that doesn't bring a shortage. It brings a price increase.
How do you think that needs to be perceived more clearly out there as folks talk about the availability of beef in this instance? The message you'd like to get across, Lee?
I think the message is that higher prices and even surging prices, which you could argue we have now, are the competitive workings of a market, and that these higher prices will help us. And they're going to help us in the short term. As we see cold storage, that's at really historic lows, or at least short-term historic lows. I think if you look at November cold storage, that was as low as it's been back to November 2010 and 2011. But that's a desire to capture these higher prices, right? So that's the short term to have that meat available. Longer term, I think that's what's driving these higher prices in the cattle industry, right? And it's what's going to spur expansion eventually, conditions allowing. So you're balancing that with the biologics. It takes quite a while to build that cow herd. You're dealing with the environmental issues of drought and widespread dry weather and what impacts that's having. But those prices will be strong enough to spur that expansion and bring more beef to the market eventually. So understanding that, again, I think we need to appreciate these higher prices. I know that's very difficult to say, but that will bring kind of more equilibrium to the market here. The quicker we allow that to happen, the better.
All right. Well, a week from today, the USDA will crank out that long-anticipated cattle inventory report, and Lee obviously wanted to get your take on that and whether or not it'll indicate, as many assume, further contraction in the nation's cow herd, or whether there's some element of leveling off, of stability there.
So for us data analysts and really market participants, this is a big report. It doesn't necessarily impact week-to-week trade, but it certainly gives us that benchmark as we look at cattle numbers and what they're likely to do in the next year and the next couple of years. The big numbers we're going to be watching are the beef cow numbers and the beef cow replacement numbers, so the replacement heifer numbers. Expectations are that they're going to be below a year ago levels. I think the question is just how much. So I like to look at a beef cow culling rate, because we've seen cow slaughter up almost 10% year over year, but that's a little bit expected of higher beef cow slaughter numbers because we have more beef cows. When you look at the culling rate, we're at about 11.4%. That's the fourth highest since 1986. So we're certainly in the contractionary phase, but this isn't the highest we've seen. So I think that equates to probably roughly maybe 2 to 3% decline in the beef cow inventory. Beef cow replacements, I think that's going to be a lot more variability in what we could expect to see. We've certainly seen strong heifer slaughter numbers, but we've seen the more heifers on feed. But we've also seen, I think, incentives to start growing the cow herd, at least as far as when we look at profitability. So there actually could be some regions of the U.S. where we start to see maybe an uptick in those replacement heifer numbers. We're going to see a lower calf crop. Again, I'll remind us that is really the impetus to start seeing much stronger cattle prices as we go through the next couple of years. As those feeder cattle tighten, the fed cattle are going to tighten. We're going to continue to see the increases in cattle prices. That's already started to show up here into late 2021 and early 2022.
And just as a concluding footnote, as this dryness persists in the west, in the northern plains, potentially elsewhere, well, that simply adds to the expectation of the industry not expanding for quite a while yet.
No, and I want to be clear. There could be certain regions that, we don't see as much of a decline. Again, I think overall, yes, we're expecting to see much tighter numbers.
Well, we will see what the USDA has to say a week from today in that cattle inventory report due out then. And Lee, as always, we appreciate your comments. Thanks, and we'll talk again soon.
Thank you.
He is a livestock economist at Iowa State University and a regular in our cattle market rotation right here. Lee Schulz with us, and you're listening to Agriculture Today. You're listening to Agriculture Today, and glad to have you back. On this segment, a glance at research, very appropriate for what had beset parts of Kansas in December and could likely do so again as we move forward here in the drier parts of the wintertime, and that is the impact of wildfire on grasslands and the ability of those pastures to recover from that wildfire. This is something our guest has studied in depth. Keith Harmoney is a longtime range scientist at K-State's Agricultural Research Center at Hayes. And first off, Keith, we want to simply acknowledge the difficulties, to put it very mildly, that the wildfires have caused for cattle producers in your region and other parts of the state as well the past month or so.
Yeah, I guess first all I want to say is that fire is common on the landscape out here, and basically all of Kansas. Everywhere there's grassland, fire is a common thing, and that's how our grasslands developed. But the uncontrollable nature of the fires that we had in December, are really unfortunate, and they're undesirable. But when we can do planned burns and do them under the conditions that are appropriate, fire is a really useful tool for us and is needed on our landscape. But the conditions that we had in December were really extreme, and the loss of property and life is very unfortunate.
And in fact, in that 4-county fire that engulfed parts of Ellis and Russell counties, K-State's Saline Experimental Range, which you oversee in Ellis County, got hit too.
Yeah, we had about 3/4 of our acreage from our Saline Experimental Range that was caught in that wildfire in December. And we also had a wildfire that went through a large portion of that Saline Experimental Range back in 2017.
Which, in fact, provided you an opportunity, at least you were opportunistic enough following that fire back in 17, to actually measure the ability of the grassland that was burned then to recover from that wildfire. Get into more of the nature of that experiment, if you would, Keith.
Yeah, we had some permanent transects that we were studying up there from a grazing study already, and so we were able to use those transects for collecting data basically following the wildfire in 2017. And that fire that occurred in 2017 actually occurred the same day as the Starbuck fire down in southwest Kansas, that large basically about 460,000 acre wildfire that was down in Clark and Comanche and Meade counties. Mm-hmm. But anyway, this fire up at the Saline Experimental Range in 2017 occurred at the same time. And we were able to go in and we were able to look at plant populations and also track forage productivity in the year of the fire and also the years following the fire.
What were you looking for here? We say pasture recovery, but define that in more specific terms.
Well, wildfires that occur during the dormant season, that's really not the best time for a fire to occur, because when the fire goes across the landscape, it basically takes off all the litter cover and all the standing dead vegetative cover that serves as basically an insulation to the soil. And so once you remove all that cover, it leaves your plant crowns, the growing points of those plants that are going to start new growth that year, leaves them exposed to the cold conditions of the winter, the extreme temperatures that can occur. And also that bare soil, it's going to allow evaporation to occur. If any precipitation does fall and starts to get into the soil profile, moisture that's towards the soil surface is going to evaporate more quickly because there's no cover there to hold it in. And also when we get moisture that falls, the impact of any rainfall could hit that soil surface and create some compaction. If that occurs, then any other moisture that falls is going to have a hard time penetrating through that compaction layer and infiltrating into the soil. And so we could get some moisture loss just from any precipitation event that occurs, just because we don't get it into that soil profile. We may get more runoff. So we could get production losses from the extreme temperatures reducing tiller density or plant density. And number two, we can get production loss from losing soil moisture off the landscape.
So in 2017, the grazing season following the wildfire, as well as 18 and 19, you evaluated that grass recovery. What did you find out in general there, Keith, as far as that grass's ability to rebound?
Well, in the most basic terms, we saw that we had a slight reduction in the population of our bunch grasses, which would be little bluestem and blue grama. We had slight reductions in their population. But we also had slight increases in our rhizomatous species, which were big bluestem and western wheatgrass, and buffalo grass population also increased slightly. And in that very first year of the wildfire, we had about a 25% reduction in forage production from our average on that rangeland. In the years following, in 2018 and 2019, we didn't see any reduction in forage production, even though our moisture or rainfall that we had in April, May, and June of those years was less than the year of the wildfire. We didn't have any loss in production those years. They were close to average. But in the year of the wildfire, even though we did have close to average precipitation, we had about a 25% reduction in expected forage production in that year.
And you mentioned how the species composition shifted some post-wildfire, at least initially. But did that reverse itself? Did the species revert back to pre-wildfire proportions then?
Yeah. 2 years after the wildfire, the bunch grasses that I talked about that had a slight reduction, the blue grama and the little bluestem, by 2 years post-wildfire, those populations had returned to about what they were before the wildfire. So we had slight reductions initially, but 2 years later, those had basically returned to levels near what they were before the wildfire. So our rangelands are resilient. They're used to fires going across the landscape. And so having this fire go across the landscape wasn't anything that this rangeland probably has not experienced before in its history. It's just that the conditions for the 2017 wildfire and also for our 2021 wildfire that went through a month ago, they just weren't ideal conditions. But our rangelands are resilient, and those grasses will bounce back. It just may take 1 or 2 years for them to recover and return to the levels that they were beforehand.
And you say, as we were talking before the broadcast, that there is a caveat here. There are no two exactly alike scenarios. So it depends on a number of variables as far as how well those areas burned this past month or so, and those that may yet be burned by wildfire here in the next month or so will recover. This won't be an exact science, if you will.
Yeah, I think what you're saying is correct. All wildfires have different conditions before the fire occurs. They have different conditions after the fire occurs. And so I don't know that we can necessarily predict exactly what's going to occur following any one wildfire. But I think some trends are there that we can predict that this potentially could occur and may occur to this level, but it's not necessarily going to be exact. For instance, we had this wildfire in 2017, and we saw a 25% reduction in that first growing season. Well, the wildfire that we had in 2021, just a month ago, it occurred in December. And so that wildfire is going to have 2.5 more months of bare rangeland before the growing season starts compared to our 2017 wildfire. So there's potentially going to be more loss that could occur in that first growing season from our wildfire that occurred in 2021, just because of the longer period that it's sitting exposed. And also, we still have the potential for soil crusting and compaction to occur and the water loss to occur.
And the dryness of the weather is factored in here clearly as well, Keith.
Yeah, I would say that the worst case scenario would that we have a really dry spring so we don't get that vegetation that survived to emerge quickly. The sooner that we get vegetation to cover that soil after a fire, I think the less loss that we have in forage production and the better it is for the whole ecosystem.
Well, for anyone who'd like to read up directly on Keith's work on this, he put together an article summarizing his findings as covered today in the Research Roundup 2020 report out of the center, and you can go to the Agricultural Research Center at Hayes website and to tap into that and read it in full. Well, Keith, here's hoping that everything falls into place for those producers so afflicted by wildfire past month and a half or so to see a quick as possible recovery to their grassland resources. And we appreciate your reporting on this. Many thanks to you.
All right. Well, thank you for having me on.
K-State Range Scientist Keith Harmoney there. We'll be back with more for you on Agriculture Today.
Welcome back to Agriculture Today. I'm Shelby Varner. The 2022 Kansas State University Winter Ranch Management Seminar Series is coming up in just a few weeks. And to talk about it, we are joined by K-State beef cattle nutritionist Dale Blasi. What is this event?
Our beef team in the past has conducted these events throughout the state over the last several years. And we're back in fine fashion for 2022 with a series of excellent programs slated for throughout the state.
Where are these different programs going to be held?
Well, our first location is going to be on February the 8th in Hays, Kansas, followed by Council Grove on February the 10th. The following week we'll be in Randolph, Kansas, and the week after that finally wrapping up on February 24th in Oakley, Kansas.
What are some of the topics that these programs hope to cover?
Well, we're going to really have a variety of different topics to address. One topic that's coming up and certainly is important to many of our cow-calf producers is bull management, getting those bulls properly managed and ready for the upcoming spring breeding season. We're also going to be talking about some of the historical cattle feeding trends. We're also going to touch on a topic, a tool that's been in our toolkit for several years now, calf food implants, what opportunities they provide you as a producer to add additional weight and subsequent value to your calves. And then the entire beef team will be present to address in a town hall fashion many of the questions and answers that are on the attendees' minds.
Who are the presenters that you're planning on having there?
Well, Dr. Sandy Johnson out of Colby, Kansas, Dr. Justin Wagner, myself will be on the program to address these various topics. Other team members that will be present as well will be Dr. Jimmy Lynn Farney. There'll be a lot of folks there involved within our beef team to address any questions folks may have.
Who are the type of people you would encourage to come to this event?
Well, I think anybody that's engaged in beef cattle production in Kansas, I think it's good to have an awareness and a knowledge of various questions that may never be thought of or be brought up during the course of the presentation. Certainly our economy and what's happening with inflation is having broad implications on beef cattle production, talking about changes in, for example, costs of mineral supplements, supplement delivery of various supplements, keeping your cows in fine form for the upcoming breeding. It just goes on, Shelby.
What makes you excited about this event?
It's a chance to get out in the state and visit with the folks that are in the trenches. A lot of things happening, a lot of changes with weather. It keeps us on our game in terms of being much more aware of what our producer, what our cooperators need for us to deliver to them. It's good to be out in the state.
For those wanting to attend these events, how do they make that happen?
Well, you can go to the ksubeef.org website for the specific locations, as I indicated earlier, as well as the contact people for each of the locations. K-State Research and Extension County/District offices have information related to this particular series of meetings. I encourage our listeners to tune in and basically go to their local courthouse, wherever their extension office may be located, and ask for that information.
When do they need to get their RSVP in by, preferably?
Well, RSVPs vary by the actual schedule of the event, but for example, 1 week prior to the Hayes event, which will be February 8th, so we're asking for RSVPs by February the 1st, the 4th in Council Grove, February the 9th in Randolph, and wrapping it all up at Oakley on February the 17th.
That was K-State beef cattle nutritionist Dale Blasi talking about the 2022 Kansas State University Winter Ranch Management Seminar Series. For Agriculture Today, I'm Shelby Varner.
All right, Shelby, thank you. And our time's away for this Monday edition. Thanks to you for listening in. Please rejoin us right here tomorrow. Until then, Eric Atkinson for Agriculture Today. This is the K-State Radio Network.